day all. Ira Epstein of Linn Associates, and here I am with my first SPDR ETF, and this will be an end of the day video. Now this differs greatly from my afternoon SPDR ETF because in my afternoon SPDR ETF, I cover all these markets. I'm not going to do that here. I give specific buy, sell, do this, do that, and more indicators that you're going to get. But we want to get into the habit of getting you used to these. Now, how I've done them is I've taken the SPDRs at the top end, and they end about right here with QQQ, and that's where you get 3 stock indices. Then I'm going to be covering gold, the GDX, the GDXJ, the juniors for you. I go to silver, TLT, the oil complex. I cover the service providers. I cover the oil itself. Then I go to emerging markets, by the way. You'll see that I do that. And the different currencies. That is what the afternoon SPDR video is. This is called an end of the day one. And we'll show you just how we work with this. This is called XLK SPDR. This is a technology sector. To me, a chart's a chart. This is a bar chart on a daily basis. I put on the chart the 18-week moving average, and I'll label some of this stuff for you as we get into next week, but I wanted to get this done now. So first we have a daily chart, then the swing lines here, and then this is the 18-day average and the 100 with the swing line. Now in this chart, what I really should have had is just the swing line by itself, but I was rushing to get this out for you and I made a mistake. But what is the swing line doing? The market's got higher lows and higher highs. That's an uptrend. It's the same as what I do in the futures market. The bias is because you're over the 18-week average to the upside. We've also got the 100-week average here. Now, I'll probably add the 200-week, and the reason I'm going to add it is these don't expire like futures contracts. You can get longer averages, and a lot of traders use them. Where's the resistance in this market? I want you to look at these black dashed lines. They are called Bollinger Bands. Whether you use it on a futures chart, a real estate chart, if you have the data plotted, it's an algorithm designed to keep the market trading within the band 95% of the time. When the market stays over the band a few times in a row, more than once, the odds are strong it's going to pull back into the band. That doesn't mean it's going to turn bearish. It's going to pull back in. I have not changed my attitude that the first time you get up and challenge a band, the pros are taking some money off the table. That's what I think goes on. And you often get a spot to come in. Is it always? No. But is there anything bearish on this so far? No. The bias is up. You've got the pattern of higher lows, higher highs, riding the band, and what else? The embedded slow stochastic reading. Now, as I said, all these will be labeled for you starting next week. But I wanted you to get a flavor over the Martin Luther King Day as to what I'm doing. This is the XLI, the industrial sector. So we know that this has been one of the weaker of them. It's still at a new high on the move, but we know that it's not as strong as consumer areas and so on. And like the others, once the market got its footing against this 18-day average of closes, it started a pattern of higher lows, and it's kept that. It gets to the Bollinger Band, gets thrown back, gets to it, pushing it out, admittedly. And until you lose the embedded reading, and that's the condition where the red and the blue lines are staying for several days or more over 80, when the red line gets underneath it, and let's see if we can do it. We've got one right here. That is a sign, and often it happens before the price break. But I'm just going to show you. So you have an embedded reading. When you lose the reading, and the market will lose it when one of these numbers closes under 80, it's often a sign price and the 18-day average are going to run at each other. Now, in this particular instance, it missed it by 1 tick, and then it comes to it right away. But that's often the case. What about if you rally again? The resistance, the band, and support the lower band. Not a surprise to me at all. But you're looking to see, just the way we do in futures, do you get the swing line pointing up or down? Does the market get the bias moving with it? And if it does, where's momentum? And when you get it, you start making up trends and stops, of course, and what the market might and might not do. I'm going to carry you now to the energy sector. In the energy sector, lower highs, lower lows. Now this market topped out really back here. Then you had your bounce back to the 18-week average, fell to the Bollinger Band, and it was right in this area on that secondary rally that I think the pros were coming in. And don't get me wrong, that first challenge of a 100-day average is always important. You were just oversold and you're not embedded. You're in an oversold market that's in a downtrend where you've hit downside targets and the market is trying to figure out what is the next move out of that. When I come to QQQ, higher lows, higher highs. Do you not have an embedded reading that stayed in place? Would you be bearish this? No. Now on my afternoon SPDR ETF, I show where I think you buy and where you sell in these. But here, the bigger picture is an uptrend, riding the Bollinger Band, not getting excessive over it. That's very important with an embedded reading. In the emerging market ETF called EFA, higher lows, higher highs. Now, if we step back from here, you've had that pattern. There's supports right at the 18-week average, momentum flat. Momentum turns up here. Now we're looking for the upper Bollinger Band potential. Doesn't mean it has to get there. That would be the first resistance area. What's the trend? Higher lows, higher highs. I'm going to always say, first time you hit that band, you're going to see possibly the pros take some money. In other words, a resistance point. But when you get a narrow band, you're inevitably looking, are you going to break out of the market, out of that? Because in order to get a trend up or down, you've got to leave the sideways action. And when you leave it, you inevitably get overbought if you break out of the bands to the upside or oversold. The question is, do you stay out of them and do you push the market away from that sideways action? Backed off, starting to push up, and it's giving its best to say it wants to widen those bands out, but I'm not convinced yet. It's overbought in a resistance area in an uptrend. GLD, if we take a look, the market went back into an uptrend today with divergence. I don't think you'd disagree that momentum is pointing down. Now the numbers, one of them still over 70. It's still an overbought market. You've got to get that number under 70. Then I change my attitude. But I have bias up since you've stayed over the 18-day average. With today's action, you're breaking out of this pattern, and when I got over this high, I'm starting to make higher highs, higher lows. What will neutralize this is taking out the lows of 145.76, so be careful with that. In the minors, can it be any clearer that you're fighting a battle in the juniors at the 18-day average of closes and in the seniors, the bigger ones? This is a market looking for direction. It doesn't have a trend just yet. TLT stepped out of the upward bias that it had today. It got down with today's low to 137.36, taking out 137.39. Therefore, we had this move to the upside that was getting itself into overbought territory. I'm going to repeat. I think the first challenge of Bollinger Bands are where if you're bullish, that's where the pros are taking money off. If it comes down, the bearish bias, that's where I think they're stepping out of some of the positions. Market gets up. It looks like it's going to run to the moon. This is last week. This is where this is this week, right? Remember, this is a daily chart. Start backing off, and with today's action, you've gotten back to a neutral trend. USO, the energy ETF. I cover a lot, not in these. Wait till you see what I'm doing for my subscribers. So lower low, higher high. This has gone flat. So I keep watching this one, seeing where it's going, and then it takes you back to these others. So I wanted to give you a flavor of what you're going to now start seeing from me. And it's a bigger market, obviously, in terms of the amount of people that like things like this. And I really cover a lot of it. Where? In my afternoon, because I cover all these charts. Every one of these, I give full analysis, technical ideas. What do you do? So how do you get this? Let me explain it to you. Go to our website at www.iraepstein.com under free trials. Let me repeat, www.iraepstein.com under free trials. Click on, you want the ETF video trial. We'll get it in your hands. I'm Ira Epstein. You have a good day, and I'll see you all come Tuesday.